Welcome back, everyone, to Two Gents, 2 Cents, brought to you by 15 Minutes of Finance. This is episode 14, Utilizing Your Small Business to Grow Wealth. All right, well, this is a subject that we've talked about a lot. We've done a couple presentations on this, been to a couple trade shows where we've educated business owners on this, so we just realized we didn't have a recorded version of this content that we could share with people. So that's kind of what bred this episode.
Right.
So.
Yeah. We're actually going to switch roles here, everybody. I'm going to be the interviewer, and Brandon's going to be the insightful, knowledgeable one here. This is definitely his space, and so I think if you guys, you have questions as small business owners, this is a great episode. How do you maximize your business for wealth, right? And so, I guess I'll just jump right into it. The first question that as a business owner, I think people would want to know is like, most people think, oh, I have my own business, like now I'm rich. Like it becomes successful and now you're rich. So what would you say the difference is between like being rich as a business owner and then wealthy as a business owner?
Yeah, great question. So I don't think most people view their business as a way to build wealth in the traditional sense. I think people view their business in two ways. There's income, and then when you sell, there's a lump sum gain, a cash out.
Okay.
Those are, I think, the two ways that people look at how do I make money with my business. So if I'm earning income as a business owner, if my business is successful, I'm profitable, that money is income to me. That's how I'm looking at that money. And then there's the separate element of, oh, well, maybe I have a business that's very sellable. Maybe I have a retail store that I can sell off. There's a lot of advisory practices that's very sellable. Very few advisors just go, sorry, everyone, I'm not going to manage your money anymore and retire, right? So there's very sellable businesses. That in between, which can be 20 years, 30 years, people don't really, there's no correlation between people's business, income, and their wealth. Their wealth is usually tied up in their home value. They might have another job they're still working, or they might have a prior job, or they have a 401k that's been building in an account. Maybe they rolled it over in an IRA, whatever the situation is. They're running their business as a business owner, and then they have other aspects of their life with wealth. And it's very interesting that a lot of business owners don't ask the question of like, well, I had a job. I had a 401k. I owned the business. Can't I give myself a 401k? I don't know of a single small business that I work with that has set up a 401k plan. That's, wow. And that's something we've been asking our clients to do, pushing, trying to tell them the benefits of it. I have clients who are in this boat. They're very successful. They've built an amazing brand. They make 6 figures in net business profit. They distribute that money to themselves as business partner distributions, very standard stuff. And then they take the money they distribute to themselves and they put in an individual brokerage account.
Oh, wow.
So like that process, and that's common. Like, it's not like that's a bad move. No one is being like, what is this guy doing? Like, all of us are doing it different. That's all I see. I see people, they make money, they distribute it to themselves, which is very common. That's what you do. And then that's their money now. And then if they want to build wealth and they want to invest, then they invest, quote, their money.
Yeah, it's in their bank account, not the business bank account.
Exactly.
Why do people, if it's so common, why do they do it? And if 401k is such a household name, which, children know what a 401, or I've heard the name. They don't know what
Mine
it is.
Sure as well will.
Yeah, well, they don't know really what it is, but they've heard the name. So if it's a household name, how come people are doing the former than the latter?
I think it's an education / perceived complexity barrier. So I think people, you hear 401k plan, right? You had someone like interview you, your preferences. And I think there's this understanding that like a 401k plan is for public companies with thousands of employees. Like, You're at this big place, you can opt into this 401k plan, even though there's solo 401ks, there's other types of investment plans you can set up through your business. But I think the idea in people's heads of a 401k plan is synonymous with a huge company move. Like, oh, this is a real job. I'm not at blah, blah, blah anymore. Like, I'm at CBiz MHM now. I've got a salary and a 401k and benefits. It's kind of in that same category of benefits packages and that are seen as like a position in a package offered to high-end people. It's not seen as just like any business owner could do it. It's seen as something that's exclusively to very large.
So it's unrealistic to like a typical small business as we would know them.
That's what I believe is the perceived idea. Yeah.
Interesting. Okay. Well, so why is that wrong?
Well, it's wrong. Just there's not really a lot else to expand on it. There's nothing stopping a business owner of any size of starting a 401k or any other type of retirement plan.
Okay.
There are obviously certain elements of benefits packages that might have more incentive for large corporations. Like you don't need to retain your own job, right? You're the business owner. So there's different incentive structures of like, I don't need to create a benefits package to attract talent. It's a different mindset. But if your goal is just to put away money that's tax sheltered, that's growing or tax deferred, growing in an account for years and years and years, you're not reporting capital gains on the trade because it's inside of an account. It's not just an individual brokerage account where everything you sell has capital gains.
Right.
You have all these advantages. You can set that up through your business. A business can have a 401k plan, and you can offer that to yourself as the employee. And if you're by yourself, great. You're the only employee. There's no complexity to think about. The smaller and simpler your business, the simpler the 401k plan becomes. But it's not inaccessible to you. Mm-hmm. And it's so underutilized, and yet the long-term impact of making choices like that early on, even just putting little amounts in, you have basically there's two ways that wealth ends up being created, and both are super impactful. I started a business when I was 25 with my wife, Michelle. We opened the escape room. I hadn't turned 26 yet when we opened our door. So I'm 25 years old. We just talked in the last episode, what does it take to be a millionaire? At age 20, it takes $12,500 to grow to $1 million with the power of compound interest because you have 45 years before you retire, right? So for me, I was 25. It's probably $18,000, something like that, to grow into $1 million. So even a couple years of pushing money into a 401k plan through my business, the tax savings alone by actually getting a write-off through employer match 401k contributions, even if that's a couple $1,000s a year saving on taxes, those thousands of dollars a year over the course of 30 years, that's $1 million. Mm-hmm. And then you have the actual money that you contributed, which is $4,000, $5,000, $10,000. If you want to max it out, you can contribute up to almost $70,000. That could be $1 million or millions of dollars. So you're getting two benefits. You're starting your investment early through a 401k plan the same way you would through a normal job. You and I have met with plenty of clients who have very normal jobs. They're an engineer, they're a nurse, they're a full-time teacher, and they were just diligent for 40 years. They never made a lot of money, but they always put away a little bit, and they have over $1 million that we now manage, right? So there's so much power in the power of compound interest. And in the case of a business owner, it's not just a choice of, well, I have this job, I don't need quite as much of a budget. It's important to me to invest a little bit of that money. You have the other element of you have a business that is earning business income that you're taxed on. Yeah. So now every dollar of that employer contribution is also saving you taxes. And if you just look at how much money you're saving every year, the compounding of that by keeping it and investing it and not paying it to the government, that growing over the course of 30 years is probably another $500,000 to $1 million.
Do you have like a general, obviously we don't have a case study in front of us, but if you have just a general person who's making $100,000 a year and they're not doing the 401k, how much money would they save roughly? And that's just what the business is generating. So it's generating 100K. How much would they save roughly by just doing a 401k?
Yeah, that's a great question. So obviously this isn't specific advice for any one person. State income taxes is going to be a big factor, but I'll just use a specific client of mine without naming anybody. So they earn six figures through their business. They pay themselves a reasonable salary of about $60,000 to $70,000. They're an S Corp owner, so you have to pay yourself a salary. So they have their small salary. They earn six figures. All of that passes through their S Corp. It goes on the K-1 statement, taxes, income, ordinary income to them on the tax return. Their total tax bill is $70,000 at the end of the year, all of their income combined. If they wanted to be really aggressive, they could defer up to $23,000 of their own income into the 401k plan.
Okay.
The company could match another $23,000. It's limited to 25% of the salary you're matching. So they would have to increase their salary by a little bit to get there. So we can even just say 20 and 20. They pay themselves an $80,000 salary, so they defer 20, then they match another 20. And then you can also set up a profit sharing plan on top of that. A profit sharing plan can be an addition to a 401k where you take the business profits at the end of the year and you make a discretionary decision. You're not locked in any long-term plans. You make a discretionary decision to put another match into the 401k. That's also capped at up to 20% of their salaries. You put another 20.
And that's also qualified money, so you're not paying
money.
Taxes on that right then.
Correct. So the business doesn't get obviously deduction for your own deferral, but you do, because now your W-2, you earned 80, but box 1 of your W-2 is now going to say 60 because you deferred $20,000. So that $20,000, it's not on the business, but it still gets you to the same place. It's still a deduction on your personal taxes. So $20,000 deduction, $20,000 401k business deduction, $20,000 profit sharing business deduction. We've saved $60,000 in deductions. Their tax bracket, earning 6 figures in California state income tax, no less than 20%. It's probably between 25 and 30%. So you're talking they saved $15,000 to $25,000 on their tax bill.
Okay. So that, first off, that's powerful, right? Everybody knows that. If you went from having to pay $25,000 on your tax bill and now you're not paying $25,000 on your tax bill, anybody, I don't care how rich you are, Donald Trump would like that tax break. Mark Zuckerberg, anybody you want to name. Why? So you've said that you have a client who currently doesn't do this.
Correct. Almost all my clients don't do that.
Well, so have you said $25,000? Like, what is how do they respond, and why should they versus, in their head, what's their excuse, I guess?
Yeah, I mean, great question. Sometimes I don't know, to be completely honest. It's like, hey, this can really work for you. Here's a projection of how much it can save you. I think there's still like, I don't know if I want to set up a whole 401k plan. And I think so. There are some considerations. For example, if you're not a solo company, if you do have employees, you can only be so limiting in your qualifying activities or qualifying characteristics that you say you have to do this to opt into the plan. You can't be like, the way to opt into the plan is you have to be named Brandon West and you have to be the CFO. Like, you have to there are guidelines the IRS gives you, and you can cap it based on certain things such as time worked with the company. They have to have worked, I think, a minimum of 500 hours each of the last 2 years, or it's 1,000 hours each of the last 2 years. So there is some times where people are like, yeah, but if I did a 401k, if my other employees opted into it,
then
I
you
would
have to play that.
Now it would be a bigger expense.
You can't make it hard to join the team, is what you're saying. If you do a 401k, pretty much it's everybody gets to play kind of thing. Okay.
But you, on the employer side, the only rules that you have to set up are the matching rules have to be consistent. So if their salary is lower, you're never going to have to put in as much either way. They also have to choose to make contributions that you then match. So it can be 50 cents per dollar up to this cap, or $1 per dollar, but only up to 4%. You can set the rules. And the bottom line for most business owners, a lot of business owners, they are the only person who would qualify and they wouldn't have to worry about it. And the people who do have other employees that there's no way around it, these employees meet all the checks, they would have to qualify. There are very rare cases where it's going to cost you so much money to match those couple employees' contributions that it outweighs the monumental tax savings of doing it through the business and saving on your business taxes.
I see. So with the retirement plans, which is what a 401k plan is essentially,
right?
It's obviously got to cost money. It's got to be an upfront expense or ongoing expense. I mean, what do those look like for the average small business? I know there are specifics, but just the average, like, what does that look like?
Yeah, so it really depends on what you're looking for. So it will cost something. So a 401k plan is one of those things that will cost something. There are significantly more available, cheap, easy integrations that have sprung up in the last 5 to 10 years. So almost any payroll software that you log into when you're running your own salary or you're running payroll for your employees, I use OnPay for a lot of my clients. I really like their customer service. I've used Gusto. I've used Patriot. I've used ADP. They all now have integrations. You go to Gusto and you look at their list of apps, there will be companies that will do 401k integration for, often we're talking hundreds of dollars, and then the maintenance fee even lower than that. So if you want a customized, thorough 401k plan, like we meet with a client, they want us to set it up, they want us to manage it. We have another person that we're paying on all the compliance security side because the IRS needs all this paperwork at the end of the year, but we're managing all the assets. Usually we would charge a couple $1,000s, and that's for like a customized plan. So we're meeting the employees, we're meeting the business owner, we're catering the plan and communicating all of these different things that they want to the paperwork filer. That's a fully customized plan. We're talking a couple grand one-time setup fee, and now they have the opportunity to do this every year, save tens of thousands of dollars.
Yeah.
So it's a small cost, and if you want to do it really bare bones, it's an even smaller cost. So there's ways to do it super affordably, even with a specialist who is customizing it and being thorough. It's so much less than the money you're going to save. And more importantly, the part we haven't even talked about yet is the wealth building part. Just 1 year of putting $60,000 into your 401k from your 20, then the 401k matching, then the profit sharing. That's $60,000. If you're under 30, it's over $1 million. Even if you're 40, it's hundreds of thousands of dollars. If you do that every year for 5 years, it's millions of dollars.
Yeah.
It could be 8 digits. So even if you didn't save any money on taxes, you should be doing this, because the big thing on the wealth growing aspect, the tax savings are huge. The tax savings also help you build wealth, because now that's $15,000 to $25,000 that you're not spending to the government. You're either paying to yourself to grow, or you're reinvesting in the business and earning dividends on that. So the tax savings are huge. But the biggest thing is the actual investing element. There's no individual plan available to people that has the same contribution limits as an employer-sponsored plan. So an IRA is $7,000, I believe. I think it went from $6,500 last year to 2024, $7,000. If you're over 55, you add a couple thousand extra as what's called a catch-up provision. We're talking $10,000. Your spouse can do it. If you and your spouse both work for a small business that's successful, you can each put $70,000.
So you're saying, for as far as building wealth goes, owning a business or being a small business, that's one of the best ways to just accumulate net worth.
Correct, because it gives you access to a cap that legally is so much higher than individual retirement account caps, whether it's an IRA, a Roth IRA. If you're putting just money into a brokerage account, well, now you're paying capital gain. So in terms of tax-sheltered retirement plans that you can trade and grow and either not pay taxes at all at the end through a Roth conversion or a Roth contributions, or even just you're not paying taxes until you pull it out. It's growing without paying capital gains taxes. Either way, it's giving a tax incentive for you. Any plan that does that, a retirement plan, there's nothing for an individual that even matches or close to exceeds what's available to a business owner by being able to create an employer-sponsored plan.
And we're only talking about K plans right now, 401k plans, but there's like 5-6 different options?
Yeah, there's simple IRAs through the business. There's SEP IRAs, which is a self-employed pension IRA that the business can make matching contributions subject to, also certain limits. You can do a profit sharing plan without the 401k element. You could just set up a profit sharing plan. There's a lot of different methods available to you. If you are having a good year and you want to retire a millionaire, there is nothing available to you that replaces a well-funded 401k plan orchestrated through your business. And all of those fees we're talking about, those are also deductible. So keep in mind that you in this scenario we gave, you have a little over $100,000, you're 6 figures. You put $60,000. You're saving $15,000 to $25,000 on federal and state taxes. And then even the $2,000-$3,000 you paid whoever your setup administrator is that created the 401k plan for you, that's also a deduction. So it cost you $3,000, but it's also reducing your income. So really it cost you like $2,200 because it reduced your income. That's tax. So you have to basically apply your marginal tax rate to these expenses. It costs that, but you're also saving on taxes. And so really it's only 70% is like the true cost to you as the business owner.
Okay, so that's probably hard for the business owners to say, I'm not seeing it immediately.
Sure.
So that's one of the deterrences for them. Is there, we're trying to do it already with our clients, but like what is one thing you would tell business owners who they've probably been bombarded by other CPAs. Hey, you need to do this retirement plan. This will save you money. And they just haven't done it. Like, what is something you would say to those people?
Yeah, great question. So first of all, I'd say I don't think a lot of people are getting this advice from their CPA. I would say that's first and foremost. I work with a lot of companies, and a lot of CPAs, look, we should have the expertise to advise clients. Most CPAs that I've discovered just by looking at the work of clients that have come to me and viewing past work, CPAs view themselves as compliance employees or compliance contractors. Oh. They're ensuring that your tax return is done the right way. And on a technical standpoint, that's correct. That's their job. A CPA should be providing recommendations and advice to advise future tax years to say, here's your tax return. But I've noticed that your tax bill is high, and there's a couple areas that would immediately save you. Let's file an S-Corp election to change your structure and save on self-employment taxes. Let's set up a 401k plan for you so that we can put money into retirement and tax defer that money and get a business deduction in the current year. Let's look at your home office and see if there's a way that we can legitimize this and make this a legit home office that we can write off. There should be an advice element, and that's often missing. For those people who maybe just haven't done it and they have gotten this advice, if you haven't seen the actual numbers, call your CPA. If you don't have one, set up a free consultation with us, 77 Financial Group. Just see the number. Say, this was my tax return. Can you real quick just give me a projection? What would it have looked like if I would have maxed out my 401k? If you see how much you'll save in front of you, I don't know at that point why you wouldn't do it. I don't know what would deter you from not wanting to be a millionaire.
So on that note with the CPA stuff, I've experienced this personally. Like, I've probably worked with 4 CPAs, and you sort of just, okay, you're my CPA now. Like, how do you know a good CPA from a bad CPA? What questions do you want to ask them when you're talking to them? I mean, how do you interact with one where you go, that's the right one for me?
That's a great question. I would say the first thing is same thing as a financial advisor, same thing with any position. If you're a business owner, is to interview people. I would talk to a couple CPAs. I think you'll be able to tell who's a good fit, who's asking questions to learn more about your business, as opposed to just saying, yeah, this is what I do. Here's how much it costs. Like, if they're inquiring more info, okay, well, do you have a business car? Do you drive for work? Do you have a home office? What's your business structure? Do you have last year's tax return? Show me. If they're asking these type of good questions, that means they're trying to dig to the bottom of things, as opposed to just, yeah, this is what we offer. Here's our price. This is what we do. If there's no discovery going on, then there's probably not advisory going on. That's what I would say. Okay. Other than that, I would ask your CPA. If you think you like your CPA, you're not sure if they're doing everything available to you, I would just ask them, hey, looking at my last year's return, my 2023 tax return, is there something I can be doing better this year? If there's nothing they can think of, or they don't try to look for you, they're probably not in the business of advising you. They're probably just, you send them your books, they file your business tax return. That's all they do. So ask that question. What could I do? What could I implement? And they should have proposals for you. Or it could be you are doing everything right because you've been working with them a long time. And then they'll probably be like, there's really, at this point, like, your business is just successful. There's really not much we can do. Remember, we did this, we're writing this off. Here's a couple questions, but there's really not anything else we can write off. Then you can probably tell if they're still being thorough, even though they don't necessarily have a proposal. But if you're profitable, especially anywhere in the above your own salary, you're making $50,000 to $100,000, and nobody has recommended any sort of retirement contributions through your business, there's probably something missing in the advisory that they're offering you. And that's why we do what we do, that we can combine the asset management, the long-term financial planning with the CPA practice and advisory. There's probably more that a team like ours, a firm that offers a team, can be providing above what just a CPA doing tax returns can do. If you're profitable and they don't mention it, you're leaving something on the table, because it should at least be something that every business owner knows about, because it's such an important tool.
So when I'm thinking about small business owners, and it's like, okay, I've been doing everything myself, right? There comes a point where it's like, okay, I don't want to do this anymore. I should speak with a CPA, or I should get a financial advisor. What is that threshold? Like, when does it become time? Like, obviously it'd be smart to work with a CPA from day one, but that doesn't always happen. So you have a business that's successful, but right now it's just a 1 or 2 person shop. When does a CPA make sense for the business to like hire them?
I would argue being a business owner is that threshold. So an
Okay.
individual often doesn't need a CPA. It's always good to know that the person's doing your taxes is kind of the furthest in their field, so to speak, who knows what they're doing. But if you have a W-2 that you do an H&R Block and it takes you 10 minutes, like I can say I can't get you another deduction. There's nothing available to you. You're an employee. You have a W-2. It's all written there. Like, there's nothing I can do. There is probably something a CPA knows about small business taxation if they are a CPA that does small business work that you don't know. So if you're a small business owner, there's usually more money involved. There's the potential for much larger write-offs. Almost always, I would say that is a threshold. If it's a hobby thing you do, you sell stuff on Etsy, you make $8,000 a year, they might be able to come up with enough write-offs. It's worth talking to one. It could be there's not really much. Like, you don't have a home office. You just live in a little apartment. You sell things on Etsy. Your costs are $5,000 and your income $6,000. You probably don't need a CPA. Doesn't hurt, but you don't need it. If you're like legit running a business, you need a CPA. If nothing else but to take the stress of doing it. Like, you shouldn't be worried about a business tax return. It's much more complex than an individual tax return. There's just no reason to worry that you're not in compliance with something that's going to get you in trouble, or you're missing out on a deduction that's going to outweigh, a reasonable fee to prepare your tax return.
Okay. So with the wealth aspect, so just the concept of wealth versus being rich. Like, when I hear rich, I make a lot of money annually, right? But wealth is, what do you have that's just sort of like a nest egg? What do you have elsewhere? What do you have money in? What's producing money for you, et cetera? Right. When it comes to the business, and say we've got somebody, okay, we have we have some Christmas light clients that we work with. They hang Christmas lights. They make $500,000 a year, and they work for 2 months, right? So that right there, that's a really good business. They do that for 20 years. What is the ABC of building wealth? Like, you've already mentioned the sell of the business, the 401k. Like, what are the other things that they can do where it's like, this is my retirement, this is my net worth, etc.?
Yeah, I mean, if you're anywhere in that boat, first of all, that's our ideal client, because there's so much room to help. There's probably, if they're not working with a really good team that is proposing recommendations, CPA, business, deduction, savings recommendations, as well as wealth building recommendations and advisory and wealth management, there's so much being left on the table, and you're in such a good position because you don't have a lot of people that you're worried about. It's mostly just, how do I maximize my wealth through what I do? You are profitable, you're making money, and also you could be operating in a short window. Some people have really successful summer businesses where they do a ton of lawn care and pool cleaning. Make sure you talk to your CPA, because your season comes and goes, and then you don't really even think about it because you're done. Mm-hmm. Christmas lighting people, you get started in September. You're at the peak in December. You don't even really have time to be meeting with your CPA. Well, now the year's done. If there were things I could have advised you on,
I see.
By the time you're thinking about it, we're in January, February, starting to prepare your tax return. We can't spend money in 2024 anymore.
Yeah, retroactively, yeah.
So you need to be talking to somebody earlier than your busy season starts, and make sure that you are doing things the right way before you're doing it. That's super important. So the ABCs. Make sure your structure is correct. So whether the best thing for you is to be a sole proprietorship, an LLC, an S corporation. For most successful business owners, it's S corporation. If you haven't made that election, if you're not filing an 1120S, it's still on your 1040 on Schedule C. If you're filing a 1065 partnership return, you should probably be filing. If you don't know what it means, go to 2023. See if your business return is an 1120S. See if that's the big number on the top left. It's almost always going to be the best for you. Then you need to be looking at deduction. So you need a CPA that can sit down, tell them about your business. Hopefully they're asking a lot of questions about your business and maximize your deduction. That's everything from, well, I do meals while I'm traveling, but sometimes I use personal cards. How do I correctly reimburse myself and get a deduction for that? I do have a home office, or I have a separate room. I don't know if it's a home office. What do I have to do to legitimize it as a home office so that I can deduct it? I just yesterday answered a series of emails with a client. Hey, I have all this. It's one of my Christmas lighting clients. Hey, I do a lot of Christmas lighting. I'm expanding my warehouse. I'm growing. I need like another truck or two. Do I buy it? Do I lease it? What if it's in my name? What if it's in the business's name? That's probably not something you know the answer to. Do you know the rules of bonus 168 depreciation on a business vehicle? No. Hire a CPA. So there's so much complexity there. Maximizing deductions. Then step 3 is where you go above and beyond that really separates someone growing wealth and maximizing deductions besides someone just running a pretty successful business and having a decent amount of deductions. That's where you set up a 401k plan through your business. You set up matching contributions through your business. You set up a profit sharing plan on top of that. You should be running your healthcare through your business. If you have health insurance, which most people do, California requires it, there's a mandate for it. If you have health insurance and you're paying for health insurance, why would you not want a business deduction? If there's no, like, you can get the same coverage, you can probably get a cheaper rate through the business, a business sponsored plan, an employer provided plan. And then beyond that, you're getting a deduction because it's an employee benefit to a key employee. So those are the type of things where now you're setting up your retirement contributions through your business. You're running your benefits program through your business. There might be things you can reimburse yourself for that can be legitimized as a business expense, like cars and home offices. So there's now so much you can do where you can use your business to build the same wealth, to create the same benefits for yourself that you've been paying individually. And now you're probably going to get cheaper rates. You're going to save on taxes. And in often cases like the wealth creation, there are larger limits where you factually can build more wealth than someone who doesn't have a business because you have higher contribution limits through employer-sponsored plans. So those are the 3 steps. Make sure you're the right structure that's maximizing your income and deductions for your type of business. Make sure a CPA is maximizing your deductions with you, and then make sure that you're growing. Step 3 is the growth, the wealth creation. Make sure that you're creating wealth, you're investing money, you're creating benefits for yourself through the business so that you're saving thousands on taxes at the same time that you're growing wealth and you're retiring a millionaire.
Yeah, and one thing I'll add to that too is when you say you're a small business owner and you retire at 55, right? You have this successful business and you've been building it for 25 years and you're like, it's time to sell. Well, to build a really attractive, lucrative company, you need to offer things, right? And so that's why there's a lot of tax deductions for these things. The health insurance, for the cafeteria plans, 401ks, etc. As a business owner, you want to grow. Obviously, that usually means attracting good people that you want to have on staff. All these things that we're talking about attracts them, right? If you're a good employee, well, I don't want to go somewhere that doesn't have a 401k plan or doesn't have a retirement plan. Now, obviously, if you're a small pop shop like the Christmas lights company, that might not apply to you. But if you're looking to grow, eventually you'll reach your capacity and you'll need these things anyways. So when you can take advantage of it for yourself, then when it comes time for the business to grow, you're already all set up and ready to go. And then when you go to sell, it's worth more now because you've had the foundational steps in place.
Yeah, I'm really glad you brought that up. That's a super important kind of 3rd step in the wealth. We talked about the compound interest of saving every year on taxes. What that extra savings, investing that, could be millions of dollars by the time you're retired.
Mm-hmm. Yep.
The actual wealth that you can put in as a business owner through an employer-sponsored retirement plan, that will make you a millionaire in retirement. But then you have the 3rd element where if your retirement plan is to sell your business and you're going to retire with, that's your nest egg. You don't have a huge home. You don't have tens of millions of dollars in a retirement account, but you spend 40 years, and it could be any business. It could be a really successful, well-known auto shop. It could be any type of business. Your sale price and your nest egg will go up because when someone goes to business, you go, yeah, so I have this person doing my books and I think things are a little funky, but like, here's roughly how much I made. And we have these people, sometimes we pay them in cash under the table. All of these things hurt your reputation when you're selling to a buyer who wants to know everything's in order, where you go, here's my business. I've had a CPA, been doing my books for 20 years. Here's 10 years of financial statements. Here's 5 years of tax returns. We have a 401k plan set up for all of our employees. You can opt into it as the new owner. We have a benefits package, so you'll get your health insurance covered when you get on as the new owner. Now it's like, oh, this person, they've ran a legit operation.
Yeah.
Like, I can call the advisor that manages this account, ask questions about the 401k plan. I've got a whole benefits package and an insurance agent that's running the benefits that I can call. They've got organized books. They've got on time, very organized tax returns. The business is in good standing with the state. There's nothing going on if there's an audit. Massively increases the long-term sell value of the business. So now you have the nest egg growing wealth, your tax savings have allowed you to grow wealth, and the retirement account, compound interest, that being invested is growing wealth. All of these things working together. If a business owner is succeeding, obviously that's number one. I've been there. Not all of my business endeavors have been super successful. I've had businesses, they were fun, they were great. I didn't make a lot of money doing them. That's fine. If you're in a point where you're a successful business owner, you should absolutely retire with millions of dollars. Not $1 million, millions of dollars. If you're doing it well, you're succeeding, you need to be having the business work for you. You've worked hard, you've built a brand, and you're leaving tens of thousands of dollars on the table because you're not taking very simple steps that are not very complex, that are not very expensive, that every year could be saving and investing for you and saving on taxes tens of thousands of dollars.
Excellent. Well said. What would you say are the next steps here? So like so someone wants to work with us, and then also if someone wants to interview other CPAs or next steps, like how would they go about doing it?
Yeah, so if you're listening to this and you want someone to set up a 401k plan, or you're not sure if your business structure is right, you want to talk to a CPA, 77financialgroup.com, we have a contact form. We never charge anything for a consultation, so you could always just get our advice. We love educating people. There are clients that we don't work with that we have sent them paragraphs of information. Yep. I've had clients that don't want to work with me, but they've asked me a question, and I send them, well, here's the specific California legislation that references that thing you're talking about. Here's also something I would consider doing. We love doing that. That's why we have a podcast. We don't make any money on this podcast. So we love educating clients. You can always get a free consultation that way. You can know if you're doing things the right way, or you can know what to do if you're not doing things the right way, and you could be further maximizing your business. If you don't want to work with us, if you have an advisor, see if they do business stuff. See if they work with businesses. If they don't, see if your CPA has recommendations for that element. Ask your CPA for a projection. Hey, I was listening to this podcast. They were telling me I can save money as a business owner, that I can invest money. I can set up a 401k plan. Can you give me a projection of what 2023 would have looked like if I had put $30,000 into a 401k? See how much it would save you. A tax like what if tax scenario on an already filed return should be very easy for a CPA to do. I do it for my clients all the time. It takes me 5 minutes. I never charge for it. So any CPA that you work with should be able to do that for you. So prove we're right or prove we're wrong. Go to your CPA, go to whoever you work with, or find a CPA local to you if you don't want to work with your current one, with us, whatever, and just ask for a projection. If you were to invest more money through your business, I guarantee you it's going to save you money because you get a deduction for it. There's no way it doesn't save you money. And the last really quick thing that I'll just throw out there, there's no direct correlation here, but it's just an important element to this because some people might listen to this, and for a lot of young people, they might think, okay, I've been listening to every episode of Two Gents, 2 Cents. Thank you, first of all, if that's you.
Thank you very much.
All of you thousands of people that can say that about
Tens
yourself.
of thousands.
You've been listening to every episode, and we appreciate you. So if you're in that boat, all you've told me to do, I'm under 30, all you've said to do is maximize Roth IRA. There's nothing better than a Roth IRA. Do a Roth IRA. You don't pay taxes. Now you're telling me to do a 401k plan. Like, what? I thought I was supposed to prioritize Roth IRA. You can, as the employee, you can make Roth contributions to a 401k plan. So I just want to clarify this one thing. I won't get into the weeds of it, but if you want the Roth IRA element. You want the Roth contribution element where you don't get a deduction, but you know in 40 years you're going to be making more money and you want the tax-free income then. You don't need the deduction now. That's available to you. So just know that when you meet with someone to set up a 401k plan, you can set it up that the employees are eligible for Roth contributions. Now, the employer, your company, is always going to be traditional because it gets a deduction for it. So you can't have tax-free income on something that earned you a deduction. Those are the two benefits. You either get a deduction or it's tax-free when you pull it out. Those are the two ways that you get a benefit through a retirement plan. So the businesses matching, profit sharing, whatever, those are always going to be traditional contributions, but you get a deduction for it. It's great. On your personal income, if you're a young business owner, the Roth is still our recommendation. That is generally, not specific advice to you, but it's generally your best plan. The best of both worlds exists in the context of a 401k plan. You can make Roth contributions from your own employee deferrals, and then the business can make traditional contributions to match your contributions on the employer side of things. So just know that if this feels contradictory to the worshiping of Roth IRA plans that we've done in the past, it's a very passion point of us to get young people maximizing Roth IRAs. You can be better than them by maximizing 401k Roth contributions. And now do the math of our previous episodes, but instead of $7,000 a year, you put in $23,000 a year. Huge difference in your 40-year projection of wealth.
I love it. I love it.
I love it too, and less people love it than they should. Just, it doesn't matter who you work with. Just, if you're a successful business owner, you should be making retirement contributions through your business. There's no reason.
You're leaving money on the table.
Yeah, there's no reason to make money, then distribute the money to yourself, then personally invest it. You can get to the same place. It's still your account, but it's done as a benefit through the corporation or the S Corp or whatever, and you get a tax deduction for it, and you can put more money. There's so many benefits, and there's no reason not to pursue it. As always, feel free to send us any questions. Please comment on the videos. Any question you have, if you leave a question, we will try our best to answer it in the next episode. Comment future topics you would love to hear a further deep dive in that you've heard about, that you'd want to hear talked about, hear explained to you. Any way that you want to reach us and let us know what you want to hear, we'd love to cover in future episodes. So thank you as always for listening. We'll see you next week, and invest early.
Invest often.
Take care.